Hey guys, Chris Stacy here. I hope everybody's doing well. I get a lot of questions about mortgages. I'm a realtor, so people ask me my opinion of them a lot. And they say, well, Chris, which mortgage is best for me? And the answer is it really depends. There's a lot of options out there. Depends on your situation. I'm going to talk about a couple mortgage options just to let you know what's out there, because sometimes we just don't know because we've not researched it. So first of all, you have conventional loans. They're very good. Normally they're credit score driven, so the higher your credit score is, the better that is. Down payments can be as low as 3%, but if you don't want mortgage insurance, you want to have a 20% down payment or more. Normally the interest rates are very competitive, and sometimes you have some flexible terms, depending on what lender you're working with. Then you have FHA loans, government-backed loans. Normally we call that the first-time buyer program because a lot of first-time buyers like that with the low 3.5% down payment. Then you have VA loans. So any of our military folks are available for the VA loan, another 100% program, zero down payment. Now I would tell you, some people think VA is the best, and it is a good loan, but it's not always the best. Even though you may qualify for a VA loan with the funding fee and the different things that go on, it may not be the right one for you. The more times you use your VA loan, the higher your funding fee is. And then there are certain situations where the funding fee might be waived. So if you have a certain percentage of disability through the military, it's possible it can be waived. Then you have USDA loans. That's another 100% program like VA. USDA is a great program. Normally it's for what we consider rural or maybe suburban properties. If it's in the city limits, it may not qualify for USDA, but being 0% down is wonderful. It can help a lot of folks. Traditionally, USDA loans would not allow a mobile home or manufactured home that had been resold. But I understand the guidelines of that are changing, so as I know more about that, I'll let you know. Then there's jumbo loans. If you're looking for a larger property, there's business loans. There's commercial property loans. It just depends on your situation. So I know people don't like to hear, well, it depends, but it really does depend. But I also wanted to talk to you just a minute about some myths. One of the biggest ones is, does people always think pulling their credit hurts their score? And it does, but if you're talking to, say, 3 or 4 lenders, and each of those lenders pull your credit score, and it's done within a short amount of time, maybe a few days or a week, my understanding is it only hurts your score one time. But if you pull credit for a mortgage, and then you go talk to a car dealer and let them pull your credit, and then you have it pulled for a credit card, well, those 3 hits will really negatively affect your credit because it looks like you're out there trying to get a lot of different types of credit. But when you're going for a mortgage and say you have 5 different lenders pull your credit, my understanding is that just hits you one time and it doesn't significantly affect your credit score. Another myth is you have to have 20% down to buy a house. And you know that's not true. We just talked about the different types of loans. There's a few 0% loans as far as down payment. And then there are some that start at 3%. Even conventional loans can start at 3%. There's some local lenders that have 0% conventional loans, which is kind of unheard of. The big lenders won't do something like that, but some of the smaller ones will. Another myth is you have to have perfect credit, and that's not the case. Some lending options or mortgage options aren't credit score driven at all. In our minds, sometimes we say, well, you have to have a certain number. But some lenders don't have that as a restriction. Another myth, mortgage payments are always higher than rent. I don't believe that at all. Most of the time I find that renting is more expensive than owning in a lot of situations. And then another myth, you should pay off all your debt before applying for a loan. And guys, that's not true either. Sometimes paying off debt can negatively affect your credit score. As crazy as that sounds, it's true. Sometimes people say, well, I've got a hospital bill that's against my credit, or I've got this, or I've got that. I want to go ahead and pay that off before I apply for the loan. Guys, I'm going to ask you to wait. Talk to your loan officer. Talk to your realtor. Let them connect you with a loan officer. Talk to them and ask questions about that before you do anything. Because sometimes when you pay something off, that clock starts over, and now you have to wait time before your credit score increases and get back to where it is, or where you need it to be. There are a lot of loan options, a lot of mortgage options. Which one's best for you? It really depends. Give me a call, talk to me about it. I can connect you with a lender if I don't know the answer. The important thing is here, there are options, and we need to see which one's best for you and your situation. The housing market is still really good. Doesn't matter what channel you watch on television. Sometimes the TV lets us know that the market is terrible. Guys, it's not terrible. Here lately, I think I've been busier in the last few months than I was this time last year. And last year was a good year. So things are taking a little longer to sell. So homes aren't going off and selling within, 2 or 3 days like they were. But some of them in 2 or 3 weeks, occasionally 1 or 2 months, but homes are still selling. If you need me, give me a call, 919-356-5377. We can talk about mortgage options. We can talk about housing, whatever you need me for. And at the end of the day, I just want to be a resource. If I can help you, please don't hesitate to call me, 919-356-5377. Thank you so much and have a great day.